Out taxation with representation has not been such a good idea either. Good morning, everyone. My name is Gilbert Carmona. The program is Gilbert Talks Taxes, among other things. This is a live program here this 13th day of February, 8 o'clock in the morning with a wet 35 degrees out there. It's going to rain all day. That's what my wife told me. Oh, yes. She made me take out my overcoat. She said it is going to be wet today, and my hair does not look fabulous this morning. It is wet. Those of you live streaming can see me in my not fabulous hair, although I'm wearing a beautiful vintage Countess Mara tie today. Those of you watching me live at www.wcab59.com. Good, great, looks fantastic. We are here. So I've got a lot to cover this morning. My name is Gilbert Carmona. I'm an enrolled agent. An enrolled agent is a person enrolled with the Internal Revenue Service. My authority to represent you, the taxpayer, in all kinds of matters comes from them, from on high. And as an enrolled agent, I spend all day doing tax stuff. I prepare tax returns. I talk about taxes. I give tax advice, financial strategies on how to legally pay the minimum tax that you can legally pay. That is my purpose for being on this earth, to help you figure this whole thing out. If you have a question, please feel free to call us. This is a live program. Call the radio station. Have a question already. Boy, they're coming in. They were waiting for me this morning. And this has been probably 95% of the bandwidth has been about stimulus checks. I'm going to get into that. Believe me, I'm going to talk a lot about those. The studio phone, Todd, my engineer, good morning, Todd. You want him to call it 828-286-3357. 287, you can call him that line. Okay, Todd wants you to call in on 828-287-3356. I'll get it one of these years, Todd. I will, I really will. They've got several lines here. I think they did that just to confuse Gilbert. Now, stimulus checks have to be put down on your tax forms. Yes. Let me tell you why. They're not taxing it at the federal level. The IRS is not taxing your stimulus check. There's a lot of rumors going around, if you can believe that there would be rumors going around. But there are a lot of rumors going around that your stimulus check is going to be taxed. No, it is not taxed at the federal level. It is also not taxed in it's 49 states and 16 territories. I was going to do that math in my head real quick. But one state is taxing it. Did you listen to Gilbert Talks Taxes last week, Todd? You weren't here. You didn't listen last week to Gilbert Talks Taxes? Oh, Todd, you missed quite a show. You got your stimulus check, and that's really all you cared about, so you're good. You have no reason to listen to this program. Okay, so the stimulus check is not taxed at the federal level. 49 of the states and 16 of the territories are not taxing it, but oh, Todd, one state is. Oregon. Oregon is yes, I read it, with much chagrin. I read it last week that was actually going on. Oregon is taxing the stimulus check at 8.75%. Well, that's their normal income tax. I mean, everybody talks about Oregon, or everybody that knows about Oregon talks about how wonderful Oregon is, how liberal they are, and how they give you free stuff. I actually know people that have moved to Oregon to get free stuff. Well, the only free cheese is in a mousetrap. Okay, this is my new favorite saying, because it's true. Oregon has ridiculously high tax, and they'll tax everything, even your stimulus check, at 8.75%. And the reason, and you go, okay, big deal, $600. Well, $600 per person. And by the way, they're taxing both stimulus checks, not just the last go around. They're taxing the $1,200. But a family of five, okay, got the first time around. The family of five got $3,900 of stimulus. Okay, you multiply that by 8.75, you're talking about real money. And normally at the state level, you might get a refund of $500 or $600. North Carolina, well, we have a 5.25% state flat tax, which is pretty good among states. I mean, it's not as good as Tennessee, Texas, or Florida, which has 0, but it's 5.25. Okay. And, of course, they generate revenue through other sources, too, especially tourism's a big deal here and other things. But so we tax it, but they don't tax the stimulus check. So you do your tax return in North Carolina, you may get back $500, $400. And you kind of count on that every year, and you know that it is. Now in Oregon, a person that would normally be getting back $500 or $600 now is going to owe $500 or $600. And that's a lot of stress, and they got to come up with it in 2 weeks. And they're just finding out about it now as they're doing their tax returns. I watched the news out of Oregon, KOIN news, and I was watching the reporter who's interviewing these tax preparers and interviewing people that just had their taxes done, and the look on her face, she was like shocked that they were doing this. She said, "Wait a minute, it's supposed to be tax-free," and I could tell she's going through like her own tax return in her head. And when it hit her, wait a minute, I'm going to owe money. It was like, but anyway, stimulus check. So it's not taxed, but if you did not get your stimulus check, there are millions of people that still have not gotten the $600. You're not one of them, obviously, Todd. But I am one of them. I have not gotten my $600 yet. Yeah, right, exactly. How'd that happen? I didn't get it. And I know a lot of people that have come to the office, tax returns we're doing, they haven't gotten theirs. So the way you're going to get it is on the tax return. We put on the tax return how much you received. Stimulus 1, we're calling it EIP 1, and Stimulus 2, we're calling it EIP 2. So in the software, there are 2 little boxes, and we put down how much you got. And the software calculates it for you with your dependents and everything for 2020. So that's why we're putting it on there. Now, a couple of interesting things. The stimulus was only for children that were dependents that did not, if somebody claimed them as a dependent, whether they did a tax return of their own or not, but they were a dependent of another, if they were over 16, they did not get the stimulus. Now, those children, so they're 18, 19, 20, we're having a lot of these, 18, 19, 20, or 21 or 22 or 23. They're students, they're dependents of another. They didn't get the $500. They didn't get the $600. If they do their own tax return this year, they're not dependent of another. They will get the $1,200 and the $600. They will get $1,800. So you need to look at this. If you had dependents over the age of 16 who did not get stimulus, should they do a tax return to claim their stimulus? Okay, we're doing a lot of those because as a dependent, you may only get the child tax credit for them, $500, or you may only get a little bit of earned income tax credit. If it's less than $1,800, you'd be better off doing it, and that would just be for that 1 year. It doesn't have to be forever. Don't forget, if a dependent's working and just has some part-time job while they're in school, they make a couple of $1,000s, they're still your dependent. But now they can do their own tax return and claim their stimulus. So I don't want to confuse everybody with that. That's a whole financial strategy that we've discovered as a result of this. But yes, stimulus has to be put on your tax form to reconcile it. We're reconciling it. Now, there's a couple of other things with the stimulus payments that you need to look at. But it's done. It's done for 2020. So by now, if you have not gotten your $600, you probably won't. They had figured that it was by last Monday or Tuesday. They said if you didn't get it by last Monday or Tuesday, you wouldn't. I kind of waited till the end of the week because actually on Wednesday, and I told my wife this. I said, wife, I know how our post office works. I've been using the postal system for a long time in this country. They're not going to deliver those checks in 1 or 2 days because the IRS was still putting them out through the end of last week, or the week before, the week before. So they said, well, everybody will have their stimulus checks by Monday. I said, no, it's not going to be by Monday. I would wait till Friday the 12th before I started doing any of those tax returns. So sure enough, people were calling us Wednesday and Thursday saying, I just got a check in the mail from the IRS for whatever, $600, $1,200, $1,800, whatever it was. So I knew they were not going to do that. Come on. And then plus they released them like on a Friday. They weren't, which meant they didn't even get to the post office, the postal service till Monday. Okay, now that said, everybody should have had it by now. So we're pretty safe to move forward. If you did not get the stimulus, we put it on your tax return. It increases your refund by that amount of money. If you owe money, they'll take the money you owe away from it. If there's any money left over, you're going to get it. That's simple. Okay? There's talk of a second stimulus, and because of the way they're going to do it, they probably are going to do it. They're going to they're not going to have to vote on it. They're going to do some kind of reconciliation tactic. So it's probably going to get released. Anything that happens there is going to be for next year. It's going to be for your 2021 tax return. And how they're going to do that, I don't know. And why they're going to do it, I don't know. Pretty much everybody's opening up. We have a labor shortage again. I don't get it. Why? I guess they feel the need to do this. Let them do it. Let them do it. So I'll keep you posted on that as it happens. Now let's talk about. This is really not about taxes, but this affects a lot of people. Well, actually, it is about taxes because it is a tax. Unemployment. We've been having unemployment casualties all week. People are coming to do their tax returns, and if you faithful listeners to Gilbert Talks Taxes know that Gilbert talked about this 3 weeks ago, 4 weeks ago. Todd, when did I talk about people that collected unemployment and had no withholding? Probably the first show I came back, which was whatever that first Saturday in January was. The first show I came back, so at least 5 weeks ago. I told everybody, if you collected unemployment, again, a substantial amount. I'm not talking about if you collected a couple of weeks, because some people just were unemployment for 2 weeks, 3 weeks, and went back to work. Some were on. I've gotten some of the 1099-Gs. They were on unemployment for literally a week, and that was it. They went back to work. That's all they could take. They went back to work. So when you signed up for unemployment, you were asked, do you want withholding? Federal withholding 10%, state withholding 5%. An estimated 80% of the people said no. 80%. Unemployment is taxable. And I've had several people say, well, I thought because of the pandemic it wasn't. No, nowhere was that ever said that this is not going to be taxable. Nowhere. The stimulus is not taxable, but unemployment was taxable, and when you signed up for it, it said it was taxable. It was right there, because nobody reads it. Everybody just checks the little boxes and wants to know where their money is. They check whatever little boxes will get the thing submitted. Nobody bothered to read everything they were checking. So it says it on there. And that if you collected this, you were going to owe tax on it. So people that collected for 3 weeks, 4 weeks, whatever, it's not a big deal. It's not a big deal. It reduced their refund, or they owe taxes a couple $100 more. It's the people that were out of work for 6 and 7 and 8 months. And you had a husband and wife out of work for 5 and 6 and 7 months with no withholding. We've had quite a few of those. And I warned everybody, get ready, because it's too late. There's nothing you can do now. I said it then. I said December 31st was it. So just now all you can do is get ready. I'm having people that normally and every year get back $3,000, $4,000, $5,000. They've got children. They've got earned income tax credit. They've got child tax credit. They've got all this stuff. This year are getting back $600, $900, $1,000, which is they're grateful they don't owe, but it's a shocker because they're mentally geared up for getting $5,000, $3,000, $6,000, whatever. What they're normally used to getting, now they've gone. And I've had a few that have had to owe. It hasn't been much, but they've had to owe $600, $500. They've had to owe. So we're stacking those up, and it's been quite a few. And the season hasn't even really started. So in that vein of unemployment, these people that were collecting unemployment are now getting letters. So first part of January, in through that first week of January through the 8th, letters went out telling people that they had to pay their unemployment back, that they shouldn't have gotten that unemployment, or they shouldn't have gotten as much as they had. So I've had people showing up to my office with these letters asking my advice on what to do. So when the first letter came in, I called people I know over at unemployment. Don't forget, I'm an enrolled agent. I've been doing this for a long time, so I have a few phone numbers. And I called some people, and some phone numbers that actually they were answering. And they looked it up, and they said, something's wrong here. Something's wrong. Tell the person to just wait. Sure enough, something was wrong. They had they sent out a new letter. They're calling it an erroneous overpayment. They had wage data. They're saying because of a technical error, they posted an erroneous overpayment, and this was an error. And now they're sending a letter out saying ignore those letters. So if you got a letter saying you had to pay part or all of your unemployment back, just sit back and wait, because there's another letter coming out. Okay? And this letter just went out. The one I'm looking at here in my hands was dated February 1st. So these letters are coming out and people are getting them. So if you got a letter saying part or all of your unemployment you owe it back, disregard that letter. Okay? Now, some people may have to pay some of theirs back. There were some people that, believe it or not, Todd, committed fraud and made claims they shouldn't have. I know it's shocking to believe, but there are people that did that. Those people are going to have to pay it back. In the whirlwind of initially what happened with the China virus and everything involved there, they were just cutting that money loose. Well, now they're going back and looking at it and seeing who should have gotten it and who should not have gotten it. So, but if you got a letter saying you owed some or all of it back, don't do anything, sit back and wait. You're supposed to be getting another letter. If you in fact know that letter's wrong, you should have gotten all those claims. People that committed fraud and put down they worked for people they shouldn't have and did all kinds of stuff like that, they're going to catch up with you, because this is tied into your social. This is tied into your wage report. This is tied into your W-2 and who you worked for the last I don't know how many years. They've got all those records. They're going to go back and they're going to get this. But those of you that didn't, and if you didn't have withholding, you may owe quite a bit of money. You may have a big part of your refund taken. Again, it's just be ready for it. Todd, let's take a quick break. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9. I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite.
Put Jesse James Railroad Express on your daily lunch list. He now has daily specials. Monday, get a hot dog with mustard, chili, and onions for 99 cents. Add slaw for 45 cents. Tuesday, the Carolina Express on a regular bun, any side, 16-ounce drink, $6.99 plus tax. Thursday, chicken salad croissant, any side with regular drink, $6.99 plus tax. Friday, 2 hot dogs anyway, bag of chips, 16-ounce drinks, $4.99 plus tax. A delicious lunch every day of the week. Only at Jesse James Railroad Express, open every day 11 a.m. until 4, closed Wednesday and Sunday. Call 828-447-4644 for takeout orders. Jesse James located 531 Railroad Avenue in Rutherford. All aboard.
We are back. All aboard. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9. If you need to get me, well, I went right into it. I was just so excited this morning to be here. If you need to get me, my telephone number at the office is 828-289-9300. That is 828-289-9300. My email address, Gilbert Talks Taxes, Gilbert at GilbertTalksTaxes.com. The website is Gilbert Talks Taxes. Those of you live streaming, good morning. You're watching me in my vintage Countess Mora tie. I like getting these older ties out. They look fabulous. www.wcab59.com. So there's so much I want to talk about because we've had such a busy week. It has really been, it has just been, every day has been an adventure. Yesterday was the first day to e-file. So we always say the first day to e-file is officially opens tax season. So it is the start of tax season, was yesterday. 2 weeks later than normal. 2 to 3 weeks later than normal. The reason they did that was to accommodate these coronavirus $600 payments that they attempted to get to people. And what happened is they initially, so the first wave went out to everybody who had bank accounts that you know, they get like Social Security, disability, unemployment, where they knew your bank account. Last year you got a refund, so they had your bank account. They knew it was good. That wave went out with no problem. It was the second wave, people that reported their bank accounts on the website, people that had changed bank accounts and had reported them. That second wave, which was almost as big as the first wave, was where they deposited millions and millions of checks in the wrong bank accounts. Now, the banks did not accept them because the banks have systems in place. They don't just receive a deposit. It's got to actually match the name and the owners, the Social Security number, all these things have to match. It didn't match. So the banks promptly refunded those millions and millions of checks to the IRS. And the IRS's computer didn't know what to do with that. So it took them about 2 to 3 weeks to sort that out. And they did I'm sorry, they just did not. They really needed to step up their game on this. It really took them a long time to get this money out, and millions of people still don't have their money. So that's been occupying us. That's why they extended it through the 12th. So there was a lot of confusion about that. We had the phone was ringing off the hook yesterday, people that wanted to get in to do their tax returns. You could have done it earlier. It's not that you had to wait till the 12th. We've already done and processed over 180 tax returns by Thursday night. So there you could do it. It just sat on the server till the IRS accepted them on the 12th. So yesterday we were quite busy at the office with people coming in to do their tax returns, thinking it was the first day that you could actually do it. No, we've been doing them since January. Okay, and we're moving along at a steady clip. Things are going good. There've been very little surprises other than just these technical issues. But yesterday was the first day, and all those 180 plus tax returns went through with no problems at all. So we are excited. It's moving now. When are you going to get your refund? That is the second question everybody asks me. They're processing them. So if it was accepted yesterday, if you go to where's my refund at irs.gov, the refund tool, it'll just say your refund's been received and accepted, or it's just been received. It's going to be one of those two statuses. Then they should be released in 7 to 14 days. If you have earned income tax credit or child tax credit on your tax return, they're going to hold those because of the PATH Act. They're going to hold those till February 27th. February 27th, then they start processing those. So you should be receiving your refund second week of March. They've optimistically, you may start receiving it by the end of the first week of March, but I don't think so. I don't want to get anybody's hopes up, Todd. They're going to be looking at that. They're going to be refreshing that bank statement every 20 minutes on their phone. Realistically, the second week of March. Now, those of you that are still waiting for other documents, there's been a lot of grace with the IRS because of the China virus. 1099-Rs, many have been delayed. They're supposed to be out January 31st in the mail, January 31st. So you should have started receiving them towards the end of February. I know a lot of our customers still haven't gotten their 1099Rs. I still have people waiting on some W-2s. They haven't gotten them, and then when they've contacted the employer says they've been processed, they've been in the mail, put in the mail. So just all you can do at this point is wait. Just wait. You cannot just go get your tax return done. I cannot process your tax return without a W-2. Okay, I have to have a W-2. That is, I'm an ERO, and that is the law. I'm supposed to see a W-2. You can come in with your last check stub, and I can figure it out, and we can, get some numbers in there, but I cannot e-file it. You've got to have your W-2. People ask me why. This is my last check stub. Because your last check stub could be wrong. There could be some minor things on there. They're not reconciled. That is just your weekly thing that goes out. A W-2 is reconciled. They've double-checked it. All the numbers are right. And then any other relevant things that happen, like 401ks and HSA plans and insurance, life insurance, any of these other things that affect your tax return, that information may or may not be on your last check stub, and it may or may not be accurate. That's why they say we can't do it. Now, if you don't receive it by the end of February, reasonable 30 days has gone by, we can go ahead and move forward. It's lost in the mail. Your employer went out of business. A lot of that has happened with businesses that went out of business because of the China virus. A lot of these small employers just disappeared, and their employees can't find their W-2s. Okay, there's a form for that, and you cannot e-file it. It has to be paper filed, and that's the correct way to do it. I know there's people that are going to go on TurboTax, and they're going to do their tax return, and they're going to file it, and it's wrong, and they're going to do it, and you may or may not have a problem. But the right way to do it is to submit it with a form. And on that form, you attach your last paycheck stubs or whatever proof you have, an explanation, your employer's information, and mail it to the IRS. I've had to do a few of those, and it processed pretty much just like a regular return. I mean, the people got their refund, and I never heard anything followed up. It didn't take that much longer. It did take a couple extra weeks, but it processed pretty simple. So if you're in that scenario, I would really go find a tax preparer to help you. You can call me, 828-289-9300. There's quite a few people in that boat this year. I wouldn't try to do this yourself because you could complicate things. But technically, wait till the end of February. The IRS would tell you to wait till the end of March. I think that's just unrealistic. People aren't going to wait for their refunds, especially people that need that money. They're not going to wait, but try to wait. You're supposed to try to find your employer. You're supposed to try to communicate with them somehow, let them know you didn't get it if they went out of business. If they filed bankruptcy, there's a bankruptcy attorney you can reach out to. I had that happen with a client. They filed bankruptcy. All the telephone lines were disconnected. Nobody could find their W-2s. I reached out to the bankruptcy attorney. I just happened to see his name in the court records that I looked up. Reached out to the guy and told him what had happened, and he said, I have their laptops and computers in my possession. The sheriff went and seized them as part of the bankruptcy proceedings. I have them here. He said, I probably have that payroll data. So not only was I able to help my client, but I was able to help another 16 or 20 people that worked for this company. So you never know. You never know. But you're supposed to make a reasonable effort to find it. Okay, Todd, let's take our second break. We're going to come back, and I think there's pretty much nothing else to say about stimulus right now. There's pretty much nothing else to say. No, well, Todd's like, I got my money. I really don't. I got my check. We're just gonna have to wait. I'm gonna come back. As we come back, I'm gonna talk about trusts and estates. Been talking about this for a while, and I got a feeling it's going to be a recurring theme. I've gotten a lot of phone calls on this topic, so this has been very interesting. We're coming right back. This is WCAB AM 590, FM 100.9.
Hi there, this is Kimberly, and I'm here to tell you about Peterson's Auto Service and Detail Shop. As a woman, I'm often apprehensive about taking my car to a dirty service garage. But you can be assured that Peterson's, located at 478 Butler Road, Forest City, has an incredibly clean and safe environment where you get high-quality service at a great price. Peterson's was voted Rutherford County's best auto service 3 years in a row. So take your car to Peterson's for brakes, oil change, North Carolina inspection, tire rotation, headlight lens restoration, scratch removal, and meticulous auto detailing. That's Peterson's at 478 Butler Road, Forest City. You can call him for an appointment at 245-8889.
This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300.
We are back. This is Gilbert Talks Taxes. I am Gilbert Carmona. If you need to reach me, my telephone number is 828-289-9300. My email address is gilbert@gilberttalkstaxes.com. I have two offices. I have one right here in Rutherfordton, 113 Whitesides Road, right up the street from the studio, right next to Southern Baptist Church. And I have another office in downtown Tryon, 226 South Trade Street, the beautiful Art Deco building just off the historic downtown Tryon. We have appointments available at both offices, whatever's closest to you. Actually, a lot of people in Tryon get us now since WCAB's gone FM, Todd. They can get us over there in dark corner Polk County. Hit the edge of Polk County, because that's where everybody lives, at the edge of Polk County. They're listening to us over there at the Equestrian Center. Actually, quite a few of them are. They're great people out there. I'm glad to have that office. Glad to have this office here. And you know, Todd, I don't know if you were here last week, but you know I've been voted Best of Rutherford County Financial Planner. The people that voted for me at the Daily Courier, I want to thank all of you that did that. Best of Rutherford County Financial Planner. This is my third year. I had it in 15, then had a little hiatus, and then 19, and now 20 again. Came right back to back, bookends on Best Financial Planner. No, I'm really excited about that. Thank you, all of you that took the time to vote. Thank you very much. That really means a lot to me. You know, you come and you just show up to work and you don't know if you just do what you do every day, and then at the end of the day you realize that there was really a lot of people paying attention. Just like this radio program. We just showed up to do this just because I wanted to. There was a lot of rumors and a lot of things going on about the IRS and how things worked with the IRS and doing your own tax return and a lot of things. And I thought, you know, it'd be interesting to talk about what happens behind the scenes. And people are surprised, and I've had a good time doing it. And I thank you. I want to thank everybody. Now, on a more serious topic is trusts and estates. Trusts and estates. I'm speaking now to executors and trustees, because a lot of them find themselves in this position of having to do a tax return for someone that's deceased. And it is a responsibility if you're the executor or executrix, if you're a female. The executor, it will speak in the gender neutral. Executor, you're going to find yourself in a responsible situation. So someone passes away. Now, if it's somebody that really didn't have a lot of money, there's really not much to do. But if somebody that's, I don't want to say rich, because it's really doesn't take a lot of money to create a problem. Let's just say financially comfortable. Somebody that's financially comfortable, they may have a couple of pensions, a 401k, an IRA, some money in money market accounts, property that's unencumbered, meaning no debt, no liens, no levies, no mortgage. And it doesn't take much. Last week, and I share the story a lot, it's one of my favorite career stories. If I ever do write a book, I want to do a whole chapter on just Uncle Marvin and all the other Uncle Marvins I've met, I share it a lot. Uncle Marvin, nobody knew Uncle Marvin had any money. One of the beneficiaries said, I wish I'd known he had money. I would have been nicer to him. Yes. I said, at least you're honest. At least you're honest. And he said, it's not that we weren't nice to him. It's just that he was kind of just all to himself and kind of a hermit, kind of a guy who we only saw him on holidays. And he came around, and he was a nice guy. We all liked him. Nobody didn't like him. It's just he just kept to himself. Well, Uncle Marvin never married, worked at a mill for 40 years, had 40 acres and a house up past Bostic somewhere, and when he died, his estate was worth like $1.5 million, and nobody knew it. And it seems like, how can't? Well, he never spent any money, and he had assets. And he put all his money in his 401k. Well, back then there were pension plans, but today it's a 401k. And the guy, everything they offered at the plant, he bought. He bought savings bonds. He bought life insurance policies. And he left his 5 nieces and nephews a tidy bit of money. He left every one of them about $300,000+. There were 5 of them. And so there's a lot of Uncle Marvins out there. And while in today, that's really not even a lot of money anymore. But that's very simple, or not very simple, it's very common to find somebody with an estate worth $500,000 or $600,000 or $700,000. It's just not that uncommon. Just if they've lived in the same house for 30 years and they bought that house, or 40 years, they bought that house back sometime in the 80s. They bought the house. I'm having this with a lot of people in California right now. I've actually got clients in California. I've got clients in Texas. I've got clients in Nevada. And this is actually happening to them right now. And in Illinois, I've got some clients, Florida. This is happening to people. And right here in Ruffton, this is happening to people. They bought houses in the 80s. They bought a house for $80,000. Well, that house today is worth $600,000, $700,000, $800,000, $1 million. In Chicago, $1.2 million. And they paid, $100,000 for the house. So you've got quite a bit of capital gains tax. You've got quite a bit of income tax. You've got quite a bit of stuff happening there when somebody passes away. So financially comfortable, let's just say that, loved one passed away. Now, whether the person was single or married, they may or may not have been a relative. In any case, you're the one that's now acting as the executor for the deceased person's estate. Good for you. But it can be a lot of work, and handling tax matters is an important part of it. I actually thought I was going to cover this in three radio programs, Todd. I think I'm on, the 5th one now, talking about this topic, because it gets deep, and I get a lot of phone calls during the week about it, and thank you for those. So what exactly is the executor's role? So when a loved one passes away, and again, it doesn't have to be a family member. You could be the person responsible for it. So there's a lot of financial fallout. We're gonna call that person the executor. There's a lot of names, and in different states they're called different things. Some of them call them trustees, beneficiary, a beneficiary elect, whatever the title is. I'm just going to use the generic executor. Now, if there's no will and it goes to probate, which for some reason people think probate's a bad thing, it's not a bad thing. I know that in probate, financial topics come to light that would not if you had a will, but it's not like the probate court's going to take everything. That's kind of a myth that's been out there. But the fact of the matter is, if you die without a will, it's going to go to probate court. Probate court is going to appoint an administrator. Now, that administrator could be the spouse. That executor could be a child, not a child, but a child of the descendant. Of course, and it would be an adult. It would be somebody over the age of 18, a family member. Let's say a family member. So the surviving spouse, another family member, someone will take the responsibility. Now, the role of the executor is pretty simple, okay, or at least on the surface it's pretty simple. you've got to identify the estate's assets. So everything this deceased person owned is part of their estate. So you've got to identify these assets. And you've got to identify who owns these assets. If the decedent owned them by himself, those assets are part of the estate. If the decedent had a share in it with a spouse, or they had shares of a partnership, or they were part of a business, you've got to identify that. And then after you've identified all their assets, you've got to pay off all the debt of the estate, because all these people that person owed money to now have claims on that estate, okay? And you've got to distribute the remainder after you've paid off the debts. Whatever money's left over, you've got to distribute it to the heirs and the beneficiaries. And it's your responsibility to identify that they are in fact the rightful heirs and beneficiaries. I've heard many stories of people showing up at will readings wanting to know how much money Uncle Marvin left them, and the rest of the family's going, who is this guy? We don't even know this person. And they may or may not have had a claim. They may or may not. You don't know. You can't just dismiss it. Anybody making a claim, anybody claiming to be an heir, anybody claiming to be a beneficiary has a right, and you as an executor have to take a look at that. Okay? You're also responsible, and this is where I come in, you're also responsible for filing the tax returns and to pay all the taxes. Okay, if the decedent was unmarried, the initial step is to file the Form 1040. Okay, and the Form 1040 would be for the person that passed away. Yes, death and taxes, right? That's the old saying. But even after death, they've got to file a tax return. I mean, in some states they get to vote, so why not? File a tax return. You're responsible for it. You're responsible for this tax return, and that's the point I want to drive home right now, is you as an executor are responsible. The IRS is going to hold you responsible. The court system is going to hold you responsible. It is a responsibility, and you have to do it. Back before, people could claim ignorance. Well, I'm just the executor. What do I know? I don't know. I'm not a financial person. There was a famous case. I've shared the story a few times over the last 5 weeks. There was a case where the lady she was the executor, she took the money of the estate and decided she was going to invest it. I mean, how hard could it be? So she opened up a TD trading account or one of these online CompuShare, one of these online accounts, and invested all the money and immediately lost it. The heirs and the beneficiaries came looking for their money, as they'll do, looking for their money. And she told them that she invested it and it was gone. She made a bad investment, and she just said, well, they said, no, you shouldn't have done that. And they sued her. And the judge said, if you didn't know what you were doing, you should have hired a professional, and held her responsible. And this court case was kind of a game changer, because it changed the way. In the past it had been like, well, okay, well, you're not a stockbroker, so they let these executors get away with it. Not anymore. They held her. She was liable for the money, and it was in the millions. This was a family that had some money, so she paid it back. She had to pay it, and the judge held her responsible, and I believe she was also fined for not doing her due diligence and not taking proper care. So you as the executor are responsible. So get professional help. Give me a call. I can help you with the tax end. I do estates and trusts all day long. Get an attorney if you need to help you sort this out. Get a financial planner if there's assets and you don't know what to do with them while you're sitting on them. Some you can disperse right away. Some you're safe to disperse. Some you have to hold while things happen. You post notices in the newspapers. People with potential claims on the estate have a time to respond to those postings and make claims, and those claims then have to be looked at. This all takes time. Heirs are going to have to wait for their money, because there's a lot of pressure from heirs to distribute money. After all, they've got to have the money. No, don't bow to that pressure. So the first thing to do is you file a tax return. If they're single, Okay, now if you're married, or file tax return right away, because you can do the tax return through the date of death. If they're married, then the spouse files the tax return as she normally would, or he normally would, on that same timeline, but then they are a qualifying widower, and they get to file as married, filing joint for the whole year, which gives them the stepped up standard deduction. So they call that the widow's benefit. You can do this. Okay, let's take that last break, Todd. We're going to come back. I'm going to talk a little bit more about this subject, what to do with some of the expenses and how to handle them. The program is Gilbert Talks Taxes, Gilbert Talks Estates, Gilbert Talks Trusts, WCAB AM 590, FM 100.9.
As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous. People come up to me and say, Gilbert, thank you for doing my tax return and thank you for getting me that big refund. Do you have any ideas what I can do with that refund? Oh, yes, I do. Take that refund right over to NC Tractor and Farm Supply, talk to Phil, get you a brand new shiny red Massey Ferguson. That's NC Tractor and Farm Supply, Railroad Avenue. You can call Phil at 828-429-5008. By the way, mention you heard it on Gilbert Talks Taxes. I'm hoping he'll give me a discount when I go buy my brand new shiny Massey Ferguson tractor.
Exactly. Thank you. We are back. This is WCAB AM 590, FM 100.9. How did we get on that subject? Oh yeah, we're talking about coffee. We're talking about Starbucks coffee. During the break, I'm drinking the last of my coffee this morning. No, I actually am not a big fan of Starbucks. But it's not anything to do with the corporation and some of their out there views on things. I just don't like their coffee. Plus, I'm sorry, but $7 for a latte is like, maybe that's why this generation is in debt. Could it be? And I can't even. I'm sorry. The financial planner in me just will not allow me to pay $7 for a cup of coffee, when that's like the price of a 12-ounce bag of coffee. I can make a couple hundred cups for that. I'm sorry. I just something in me. And most of their coffee seems to be a dark roast. I like a light roast. So we're on that topic. This coffee time with Gilbert. Is that going to be a new program? Let's talk coffee. Coffee time with Gilbert. Okay, it's a serious topic of estates, and a lot of people don't like to talk about it, but I'm going to dive right in. But first, let me get it out of the way. I want to thank everybody that was live streaming, www.wcab59.com. We got a great picture today. Thank you so much. And again, I want to thank one more time all of you that voted for me Best of Rutherford County Financial Planner. That really, it just means so much to me. Come into my office. If you voted for me, come into my office and have your picture taken under the plaque that I have on the wall. Please, I'd love to have that. The topic, states and trusts. So the one thing that I want to put into everybody that's out there listening to me today is I see so many people, I talk to people, and with me, you don't come in and I just do your tax return. I just don't whip out your tax return and, thank you and see you next year. If I see areas where I can give you some advice, I'm not shy to give advice. For those of you that have been listening, know that. I will. If I see something, if I flag something, I will tell you. I will give you my opinion, because that's what you're coming to me for. You're not just coming to have me do your tax return, because really you could do that yourself. I mean, you could go to TurboTax online and file your own tax return. But people come to me because, and I do see things in there. So in the conversations that we have, I will always bring up, or try to always bring up, do you have a will? And the number of people that don't have a will, that do not have a will, to me is astonishing. Everybody should have a will. I don't do wills, so it's not like I'm trying to sell you to come to me to have a will done. But I know many lawyers that do. You can find one. I can recommend one. Please do not. Almost as bad, almost, not as bad, but almost as bad as not having a will is trying to do your own will. Okay? Because you can. It's legal. You can actually take out a piece of paper and you can write, my name is so-and-so, and this is what I want to do with my belongings. I want to give this to James. I want to give this to Bob. I want to give this to Tom. And I want this and this and this. And I want this to happen with my pets, because they are often neglected in financial planning. What happens to pets? I had a heartbreaking story 2 weeks ago where a pet had to go to the dog pound because, number one, the lady didn't have a will, and number two, nobody wanted the dog. So the dog went to the pound, and hopefully the dog has been placed in a home. Cute little dog, but it's a sad story. I mean, I've actually made arrangements for Fernando, Todd, in case you're. So don't worry, you're not going to be responsible for Fernando. Okay? Yeah, I got Fernando taken care of. Because it's important. What is going to happen to Fernando? What is going to happen to your pets? People don't think of these things, or people try to do these wills themselves. You can just take out a piece of paper, sign it, and date it, and that is your will. That is actually a legal instrument. That is a will. This is my last will and testament. I think there's some legal language you have to put in there, but not much. Literally just date it, put your name on it, and sign it. And that is your will. And then if you change it, the one that the courts will look at is the newest one. So if you did one 3 years ago and you dated it 2017, you do another one today, you date it 2020, the one that's 2020 is the one that's going to matter. And it's that simple. That will, you don't even have to have witnesses, although it would help. You don't have to have it. But really, if you have any kind of assets at all, if you want anything specific to happen with those assets, like you specifically want to give, there are some pieces of jewelry that have been in your family, and you want a specific person to get those, a niece, a granddaughter, a daughter, whatever. Don't assume. Please, I have been around too many of these. Don't assume that after your death, everybody's going to group hug and be happy and just divide everything in love and joy. No, there are drag out fights over things that you would think this is ridiculous, but to them it's important. Furniture, paintings, a doll collection. I mean, I saw a family, granted, the dolls were worth some money, but I've seen a family be torn up about a doll collection. And who's going to get them? And what did they want? Well, let them know what you wanted. Do a will. You can go to, there's attorneys that'll do them for $500, $400. I mean, that may sound like a lot of money, but let me tell you, there's a lot of peace of mind, and it's going to go a long way. And your financial estate it'll be way better served. If you've got a will that you did many, many, many years ago, take that thing out and look at it. Okay? Because things that you thought were important then may not be important now. Okay? And the lady that I told you that just passed away with the poor little dog that ended up in the pound, the will in that matter was very old, and really, for all practical purposes, you might as well not even have had a will, for all practical purposes. Now, life insurance policies have a beneficiary. Name a beneficiary. Review those beneficiaries, and make sure they're current. Part of the financial planning process that I do, for those of you that have come to me for that process, where you want me to look at all your financials, I go through what's called the Beneficiary Checklist. So the 401k, pension plans, IRAs, Roth or traditional, life insurance, in all of those, or annuities is the one I left out. All of those have a designated beneficiary or designated beneficiaries, plural. You can name contingent beneficiaries. There's all kinds of things there. I want to make sure they're all current. I actually had a man pass away, and his 2 beneficiaries on his 401k were deceased. And in that case, what happened is the money went to the estate, whereas if he had named a beneficiary, it would have gone directly to the beneficiary. That's why you want to do that. So if the life insurance policy doesn't have a beneficiary, or the annuity doesn't have a beneficiary, or the beneficiary died, then that money goes to the estate and it becomes part of probate. It becomes part of that whole process. And if the people that you want to get that money may not. Now, part of that money can become, and that's a whole other topic, but part of that money can actually become taxable now. Whereas before, if it was life insurance proceeds, it would have been a tax-free transfer to your beneficiary. And it would have been direct. I mean, your beneficiaries would have gotten the money right away. No probate, no court, no executor involved, nothing. Boom, it goes to them. So you want to review that. Please review this stuff. Take the time. If you don't have a will, please speak to an attorney. I cannot tell you enough. And in these times, with everything that's happening, we're seeing a lot of it. A lot of people have passed away. And it's just a topic that's before us. Okay, so how much time do I have left, Todd?
3 minutes.
3 minutes? No, I just started. How did 3 minutes? Okay. Okay, now we've got there's so much. Just so much I want to say. Okay, so and on some of this, I'm sorry if I can't be more specific. I know some people are call or text with very specific questions. For the purpose of the radio program, I try to just be very broad stroke, because we can drill down and everybody's situation is different. Okay, now, so 2 things that are going to happen. I'm going to have to this is probably going to be, I'm probably going to talk about this every week. This is going to be a recurring section, because I wanted to talk about medical expenses. There are some specific issues with medical expenses. There are, I talked about life insurance proceeds, maritable. There's an unlimited marital deduction. I might need some of that coffee, Todd, that you offered me. Marital deductions. There's a lot of other tax-related details. Okay, I'll be talking on these more and more, because I don't have time left to really get into any one topic deep enough. But 2 things that we think are going to happen that I'm concerned about happening right now. The federal estate tax exemption for anybody that died in 2020 is $15.58 million. Okay, that means that the estate, to be taxed at the federal level, the estate has to be worth more than $11.58 million. You just missed it, Todd. Just missed it. Okay, so like you got a couple $100,000 that are going to be taxable. So here's what's going to happen, though. But this is the takeaway on this that I want to drive home, folks. It is your humble radio host's opinion that we are going to see taxes go up. Okay, this is my opinion. We're going to see taxes go up. If you remember, the reason the federal estate tax is set up is at $11.5 million is because Donald Trump did that as part of TJCA, as part of his tax act. If you remember, candidate Clinton wanted the estate tax to be $1 million. Okay? And the states are taxed at 32%. She wanted it at $1 million. From what I understand, this current administration's goal is to get it down to that 1 million, 2 million. They want it low. Tell me when I have a minute left. They want it low. Okay, I'm up. My time's up.
Sorry.
Oh, time's up. My engineer had a time. You're okay. You're into story. So let me finish it. Right? It's just, what are you gonna? What comes on after me? The fake news? That's okay. Let me keep talking. This is real. This is real. This is not fake news. So I'm really concerned. That's why I'm driving this point home about estates. Get a will. Defer as much of this as you can. Don't leave money in your estate, because when it's 11 million, again, Uncle Marvin, 1.5 million. Who would have known? A guy that lived, just north of Bostic, right here in this county. This isn't some Uber millionaire that owned a bunch of Amazon stock. This is just a normal person. Estates in the $1 million range are not that uncommon, and property values are going up. We're going to see more and more of it. It comes down, and I'm just worried property taxes are going to go up. I'm worried that income taxes are going to go up. I'm worried that all taxes are going to go up. You're seeing gasoline go up. Why? This is traditionally a time of the year when gasoline is at its lowest. So I'm just, in the Bible it talks about the tribe of Ishmael who saw the times and warned Israel about the things that are going to come. So I'm seeing the times and I'm warning you about what I think is going to come up. I think we're going to see a lot of taxation. So with the people also that are deferring for 3 years some of their 401 money, IRA money they took out last year because of the pandemic, they're taking that money out, they're deferring. I'm saying let's look at paying it all this year and not deferring it for 3 years, because I'm seeing next year tax rates going up. Will it happen? I mean, nobody knows what's going to happen, but I'd rather be safe than